Welcome to another edition of the Energy Week podcast, post-Super Bowl, pre-Iowa caucus recording. Ellen, did you enjoy the Super Bowl? You have your red on for Kansas City or San Francisco? I'm not sure.
It's actually orange.
Oh, it looks red on the screen here. Okay.
It does, but it's actually orange. So my Super Bowl experience occurred in parts. The first part was on an airplane. So, but I flew JetBlue, so I got to watch the Super Bowl on the little TV, which was nice. It was a very intimate Super Bowl experience, right up there. And then I missed the entire halftime show, which according to some was a good choice. According to others, I really missed out. And then I watched the rest of it, like most of the fourth quarter, when I got home.
So I didn't watch the Super Bowl halftime show, maybe the first minute or two, but I did see Jeb Bush said it was the greatest halftime show of all time. And I was like, okay. That's an interesting choice when you have J-Lo and Shakira up there dancing for Jeb to go. But you know what? You do you, man. Right. You do you.
I really liked Tom Petty. That may have been my favorite halftime show.
Yeah,
of course, that was a Super Bowl where the Giants were playing in it, so it was a little bit difficult to enjoy. Little biased there.
And then obviously we are pre-Iowa caucuses. I have an official Democratic primary prediction to make. I will make it at the end of the show with my vast knowledge of all things Democratic policies. As you know, I'm a bleeding diehard liberal, so there we go. But before we get to the Democrats, we will have to talk about something else near and dear to my heart. China, Ellen, coronavirus.
Oh.
Yes. So I did the math between the time we talked last time and this time. And so we said between 12 and 61,000. Okay, so that equals to be, I think it was 32 to 167 people a day in the U.S. are dying from the flu. So to kind of put it in perspective, that's kind of the every day between 30 and 100-something people are dying as a result of the flu in the United States of America. So I went back and ran the numbers, and it's so when you're worried about the corona and all this stuff, because some people were like, hey, man, it's bad. It's like, okay, well, maybe it's going to be bad. I don't know, but let's just put this in perspective that this many people are dying daily in the States for something that we've had around for quite some time. So I'm not sure it is going to be the bubonic plague yet.
I think one of the issues, and I read something about this. I'm going to admit I'm not like an expert on any of this stuff, but I did read something interesting, and I'll try to find the links we could put in the show notes. But it was basically this Chinese guy's account of his wife who died probably from coronavirus, although the official cause of death was severe pneumonia. What was interesting was the way he described his experience and interactions with the Chinese health system. And to me, the incredible difficulty they had getting a diagnosis. At first she was diagnosed with throat inflammation, where the woman was clearly very, very sick. And they went to all these different hospitals, and they couldn't get into hospitals. They had to pay up front. And, it just seemed to me that there was a severe issue in the Chinese health system in terms of diagnosing people. And then they kept saying, so she was pregnant. And then they kept saying, well, because you're pregnant, we can't give you any medicine. And I get, obviously, the health system, China is a very large country, and there's a very wide disparity of, modern medicine, I guess, throughout the country. I'm guessing that in, say, Beijing or Shanghai, you'd have access to better care than you would in Wuhan and this village where, they live outside of the main epicenter. But it just seems to me that, first of all, they're probably vastly underreporting the number of cases because they couldn't officially diagnose them. And people were being diagnosed with things like throat inflammation and then dying, or severe pneumonia. And it does seem to me if they had better healthcare that, it wouldn't spread as fast and people wouldn't necessarily die of it. But of course, I'm not an expert on, public health, but
you're not Dr. Health. You're Dr. Energy.
Yeah. Exactly. I did not get the MPH in, public health. That was very popular amongst a lot of people. So it just, based on my reading, it just seemed like it it doesn't have to be this way.
Yeah, so I'm not familiar with. I didn't go to Wuhan when I was over there, so I can't speak to that. I do know one of the things that they said that back in November when I was over there, that's kind of had been catching on, and how new or old this is, I don't know, was, and it's here in the States on some level, is that you could like get your phone and use WeChat and WeChat with doctors in Beijing. So they were implementing that for some of the more poor areas that didn't have access to maybe go see a doctor. They could talk to a doctor. So I'm experiencing this is, I don't know how in depth that goes, but some of the remote village care obviously is not what we have here. But the other thing is, I guess the thing for me is if you're obviously if you're in Wuhan or wherever, then you want to protect yourself and stuff like that. But from the long-term impact, we talked last week about losing some of the demand, if you will, because of certain things they just go away, they can't come back, and you won't compensate for them. But it does feel like the markets are. Well, I say this. This kind of gets into the article. The markets are kind of having a mixed reaction on some. There's a big sell-off on the Chinese this morning when their stock exchange opened. We have an article here talking about the government's trying to head that off. We're talking about the Saudis in a minute. Everyone's kind of got their take on it, and it feels like from the money side drives a lot of the narratives from these publications. And so when the market starts selling off, the impetus is to print pieces that kind of drive that narrative. And so is it dangerous potentially and all that stuff? Of course. But the reality is, if the stock market wasn't reacting, I don't think it would be nearly as big of a story, just because the markets would be like, oh, okay. On some level, it feels like the news people go, wait, the markets are reacting. We need to talk about this more. And if the markets don't react, they just kind of let things go. But let's get to where I was going to say, which is China to inject 174 billion with a B of liquidity on Monday as markets reopen, and that's 1.2 trillion yuan. So it's 174 billion of US. So they are trying to keep things afloat, if you will, by injecting the currency there. But is it going to be enough to slow things down, Ellen, or is it just the momentum's against them?
I mean, it seems like it wasn't enough to help out all that much in terms of the market at all. Like, they said they're going to inject this, and then the market dropped a huge amount. So I think that, it was a nice attempt to try to prop things up, but I don't think it worked, because I think that people really see China as driving a lot of the global growth today. And that may or may not be true, but there's definitely a perception that China is really driving a lot of global growth, and that this is going to hurt global economic growth on a large scale. Now, one of the things that I was thinking about, though, is suspending travel to and from China, I think is a big deal, because, like, say you're a business and you want to open in China, you want to open a branch in China, you want to open a factory, or whatever it is you want to do in China. That's the kind of thing that involves physically going over to the country. And so if you can't get there, then you may find, that your opening is delayed significantly. I mean, it could have a delay of 6 months here. And that's significant both to your business and to, that gets rolled up into global figures. Though one of the interesting things that I think differs now than in previous times when we saw Asian markets dropping a lot was that, we're a lot more is actually done virtually than it was before. So, I think I saw some article. I didn't read it, but it was this is the great telecommuting experiment is now happening in China, or at least it will when businesses finally reopen, because they've been ordered, I think, or basically told to stay closed for the holiday, or some of them are closed for more time for the holiday. But it'll be interesting to see, how much does the fact that people aren't physically actually going to work impacting certain sectors of the Chinese economy. So, from a kind of academic perspective, it'd be, or for people who study telecommuting, it would be a very interesting kind of case study.
Right.
Not that we should think about, a virus as a case study, but it will be very interesting to see, how this affects productivity in certain, industries that aren't necessarily, based in producing goods.
Yeah. And, we talked about the phase one trade deal a few weeks back, and some of those things will be coming online, but it feels like that impact is so far away that the 10 trillion pounds of soybean or whatever it is, that some of those larger global economic things won't really be impacted unless you just see some kind of massive shift, and that's just not going to be the case, I don't think.
Still, I mean, people need their soybeans in China,
right?
Like they still got to eat,
right? So, yeah, that's going to be interesting to see if it does go on. They have travel restrictions. How do they feed the people? That would be an interesting thing, is how you get that food around. Because at some point, folks is going to want to move around. Okay, let's go to our favorite publication, Bloomberg Green. Is Bloomberg Green the same as Bloomberg.com, or is this is Greta's Bloomberg? That's what this is.
I don't know. I don't understand. I don't get it. All I know is there's this really annoying bright green side thing that tells us stuff that we don't really care about. Like the number of soccer pitches a forest lost this hour, according to most recent data, and apparently it keeps climbing.
Yeah, and so when you click on that, tree loss, it's not just rainforest. This is based on the 2018 tree loss. The source is the University of Maryland. So they're modeling 2018 tree losses and projecting it to 2020. I mean, where I come from, we call that fake news. That's just where I come from. I don't know. Made up statistics. So whatever. Because it could be worse, Bloomberg. It could be worse, and you're not telling us about it. But anyways, here's what we wanted to talk about. A tale of two oil giants with two strategies that aren't working.
Which is, by the way, apparently an energy and science article. I'm not sure why it's not energy and business. Like, I'm not sure what's the science aspect here.
You couldn't get the green in there unless you had the science, I'm guessing. I don't know. If you go to Bloomberg Green, that's energy and science, finance, climate adaptation, politics, culture, and design. So that's the Bloomberg.com/green. That's their new categories.
You know what else is cool?
What's that?
If you try to highlight a section of the article, your highlighting is in green.
Oh,
wow.
Oh, wow.
That is so environmentally conscious.
Wow. Thank you, Bloomberg.
Now we know that global temperatures will go down again.
Oh, Ellen, Exxon, Chevron, is it the end? Are they over? Will they be shutting their doors next week? Or is this a blip on the radar?
So my understanding is that basically Exxon has taken this strategy that, they are using this downturn as a way to buy they're spending. They're spending capex. They're funding a slew of mega projects around the world, while Chevron is sticking with this austerity push. Oh, wow, this is really weird. The picture of Mike Wirth, who is the CEO of Chevron, I don't know if it's like the weird factor of the lighting, but it looks like he has dyed his hair purple. Which I totally endorse.
It does look like him. Yeah,
I'd totally endorse that. Please, more business executives, dye your hair purple.
It should be green, but whatever.
Anyway, beyond the interesting colors here, so which is interesting because one of the big issues, and this is something that a lot of the big NOCs talk about, is the fact that capital expenditures on big projects for oil companies have basically gone to zero. The only companies that really were spending were, I guess Equinor had been, didn't shut down its big projects, but I don't think they've done a lot more. But we've got, Aramco and ADNOC, I know, are continuing to spend and spend a lot. And Darren Woods, who's the CEO of Exxon, has also been spending, and as opposed to Chevron, which is, got a better balance sheet because they've really cut back. And I guess the point of this article was that neither of these approaches have helped them in their most recent quarterly earnings. But my question is, why would you expect it to? The quarterly earnings are obviously going to be dominated by the fact that oil prices are low. So, what do you expect? The big question is the strategy going to pay off in 5 or 10 years? And that's the question. Is Chevron going to find that it because it cut so much, it has nothing in the pipeline. And Exxon's going to find in 10 years that because it continued to spend and it has a pipeline of projects, that it'll be better off. I don't know. But I really don't think that you can make a call on this strategy based on quarterly earnings.
Well, Jim Cramer did. Jim Cramer is done. Quote, "I'm done with fossil fuels. They're done. We're in the death knell phase." That is Jim Cramer, who's never been wrong.
Has he turned on his heat yet?
Yeah.
Like at all? Does he use heat?
The irony
Does he
is
put oil?
The picture is of him. Oh, it's a video. But I click that. The irony is the picture is of him at wherever he's at with all kinds of computer screens. He's got a green screen running this. And there's, let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 12, at least 12 monitors behind him that just came from air. They're probably air monitors. They're not real monitors. It's like, he's got a computer. It's like, good God, man. Like, just.
He's actually got a host of children riding bicycles outside, generating enough electricity for his,
Well, and
child labor.
Right. It's better than it's cleaner than fossil fuels. It is cleaner. To your point, though, I think the quarterly stuff and the annual stuff. Listen, if your company loses enough money over a quarter or a year, obviously it'll go out of business. But that's not the fear here with Exxon and Chevron. But the real question is, what about 2021? What about 2022? What about 2027? You know, that's where we're talking about, because unless there is a radical, unparalleled shift off of fossil fuels that we haven't seen to date, and we have no reason to believe it's going to happen. The returns might not be the same, or how they use their capex might change. Those are all things to discuss. But that's just adapting to the business strategy of the market. But to assume that these fossil fuels are done, and that's, I think I told you this maybe offline. I was at a deal with some students who were working on a debate for the little debate club that they have, and so one of the guys got up there and he goes, his paper, and so they have to write both sides of the argument, so it's not really if they're for it or against it. And he said something to the effect of, the government should reduce subsidies or get rid of subsidies for fossil fuels. And I started giving him a hard time. And ultimately what I said is, I said, you if you're going to debate, you should not debate coal with natural gas and oil. You should separate those and don't use that term fossil fuels, because you're lumping yourself in with a lot of different arguments. The ability for coal to move forward and how it will work is fundamentally different than natural gas or oil, but we still kind of live in this narrative where fossil fuels is a thing. And it's like, well, okay, yeah, they are all fossil fuels, use that term, but if I had to guess here, I'm going to say by 2050, the role of oil and gas in the global economy is going to be pretty substantial, where coal may or may not be, depending on how you see some certain things out. But so it's disappointing when you see someone like Cramer, who should understand all this stuff. I know he's a little bit of a hype guy, but it's like, come on, man, get it together. Get the dang Bloomberg green off here. Go ahead.
Yeah. Can I read it? So this comes from the Wall Street Journal. It was in the from the editorial board today, and it kind of speaks to this point, which is hilarious. So there's a very small college at Oxford University called St. John's College, and apparently they have the richest endowment at Oxford, and a bunch of students decided to have a protest in the main green, telling them that they want the college to sell its more than $10 million of its endowment that's currently invested in Shell and BP, and they want them to sell it now, like right then and there. So the guy who's in charge of this basically said to them, I can't divest from these stocks on short notice. But he said, I can arrange, and I'm quoting, quote, I can arrange for the gas central heating in college to be switched off with immediate effect. Please let me know if you support this proposal.
Well done, sir. Well done.
So, well done. One protest organizer complained that Mr. Parker was being flippant, noting, quote, it's January and it would be borderline dangerous to shut off the central heating. Another suggested Mr. Parker was being provocative. And so Mr. Parker said, you are right that I am being provocative, but I am provoking some clear thinking, I hope. It is all too easy to request others to do things that carry no personal cost to yourself.
Exactly.
The question is whether you and others are prepared to make personal sacrifices to achieve the goals of environmental improvement, which I support as a goal.
Bravo.
Yeah,
can we get him to be knighted by the Queen?
Guy.
I don't know if an American can make that nomination, but I am formally on behalf of Energy Week Podcast, we are proposing that this gentleman becomes a full knight in the UK and becomes a sir and all the pomp and circumstance that goes along. Hey, you know what? Bring back Harry and Meghan for one last hoorah. Yeah, we'll circle the wagons around this guy. I think that's what should happen. That's hilarious.
Also, Mr. Andrew Parker, you are invited to come on our podcast
Anytime.
Anytime. Yeah,
that's just I can turn it off right now. That's lovely. Oh, the thing I can appreciate about that is probably me and him would disagree on best use of energy and energy policy, stuff like that. But I can at least appreciate that he's a realist on where he's at in the world, which is, if you want to see what this is like, this is what it's actually like, and most people don't even take that. So, but. Let's turn now to Arabian business. Amid global turbulence, Saudi Aramco weathers January better than industry peers. Aramco retreated 3.1% January, with other oil giants seeing drops over 10%. Ellen, has Aramco came out the champion of the world once again?
Yeah, so this, so this is interesting because one of the big questions is that when Aramco shares started trading was, would they trade like other IOCs or would they trade differently? And what happened in early January when we had the tiff, call it a tiff between the U.S. and Iran, basically we saw that Aramco shares do not function like IOCs, that the market does not consider them the same way they consider IOCs, because we had a spike in oil prices and Exxon and all the other IOCs, their share prices also went up. But Aramco's went in the opposite direction. They went down because people were concerned about, about what's going on in the Middle East and how that would affect Aramco's, actual, infrastructure, which is totally appropriate. But I think we need to extend that and say, so look, oil prices are low now, and obviously we're seeing problems, the share prices going down with these other IOCs. How's that going to affect Aramco? And one of the things you got to remember is that there's a really, really low trading volume because Saudi retail investors are incentivized to hold their shares. So oil prices go down and they're not going to trade because they're waiting until June when if they hold their shares till a certain date in June, they get a bonus, basically. So, and then you've also got the idea that I think the market knows that the Saudi government will act to kind of prop up Aramco. So it's interesting that we're not really seeing Aramco shares fall as oil prices fall, despite the fact that if oil is lower, plus we've got this news that Saudi Arabia could cut more oil production, that's going to mean lower revenue for Aramco, period. Because they can cut 500,000 barrels per day. Not that they're going to cut that much themselves, but they could. And that they did that. Do you really think oil would rise more than like $1?
Right. Well,
probably not.
So let me ask you the redneck question here. What percentage of ExxonMobil as the company is being traded as stock, and what percentage of Aramco is being traded as stock?
Yeah, so Aramco, the percentage that Aramco even sold, they only sold like 1%, right. A little more than 1% maybe, right. and
Exxon
not even that much is being traded because you've got a lot that's just sitting there.
And so Exxon and Chevron are 100%.
Much more.
Right?
Well, I don't think it's 100%. I assume that they, the companies own a fair amount of their stock, and they're not trading that.
Well, true. But let me maybe like this: there is a part of Saudi Aramco that you cannot get because it's not even up for theoretical shares to be done. Whereas Exxon would have those shares; they could sell them if they wanted to. I would assume.
Oh yeah. Oh yes.
You see what I'm saying?
And that's true. And and the Saudi government is not allowed to sell more shares of Aramco until a certain date anyway. Right. But even with that, there's still a lot more shares of ExxonMobil available on the market.
So I'm saying when you start look at these things, it's just not like you're comparing. It's not like comparing Exxon and Chevron and how they're competing. They're two different things, and they're on different stock markets. There's different mechanisms that you talk about. So it's So, yeah, it's interesting to look at, but it's kind of like the virus versus the S&P deal. It's not necessarily a one-to-one comparison. It's just an interesting thing to consider.
It's like comparing apples to
plums.
Banana bread.
Banana bread.
There's like something similar in there. There's like some sort of like nutritional fruit value. Yeah. There's like fruit involved. But
that's funny. That's funny. Okay, well, next is a story that is near and dear to my heart. We will stay with the Saudis, and we will talk about their interest or lack thereof, maybe, in Manchester United. Which let's not kind of talk about what kind of season Manchester United's had. That's not for this podcast. We'll keep that off. But that aside, are they going to be buying the greatest football club in the world?
You know, it's weird because there's this sense that, like, first they're like, oh, they're going to buy Manchester United, and that I remember came up. I was actually at the FII when they started talking about that. Then that kind of like flitted away, and now they're like, they're going to get Newcastle United instead. But apparently they still really want to buy Manchester United. I don't know. Do you think that Mohammed bin Salman is just a huge Manchester United fan?
And I don't know exactly how it works for Manchester United, although I am a very small stockholder in the club. But they are publicly traded.
Oh, are you going to sell to PIF?
So this is not a financial advice, or should not be construed as whatever I got to say here. I think I got just a minimal shares because it actually is a pretty decent investment. Whatever. But that being said, it's like, do I still have my Manchester stock? I may have sold it. Anyways, so they'd have to buy up, I guess, the portion that's being held by privately, or that's what I don't understand. I don't know. Are they going to take them private again, or has there been any talk about what's going to happen with that?
No, I do not know.
Because their IPO,
that is a good question.
Let's see here, with a $2.8 billion valuation, I think was their when they went out. I think it was their IPO back when they went public in, was it 12, something like that. So yeah, it looks like 2012 is when they went public. So, anyways, well, no, they had an IPO in June of '91. Okay, I don't know. I don't know the history of all their stock stuff. Not really where I focus. I just spend a lot of time crying over them losing games on a regular basis now. But anyways, so
maybe new ownership is thing that I know nothing about soccer, but maybe new ownership would inject a needed like
they need to make some changes. Let's not. I know we have a Manchester fan who listens as well, and so he feels my pain.
He's invited to share his thoughts on the Twitter, potential purchase and how that could affect Manchester United's effectiveness on the soccer pitch.
Something
football pitch.
Yeah, you'll get blasted for saying that, but yeah. So it would obviously buying Manchester compared to Newcastle is it's like owning the Cowboys compared to having a college football team. It's not even it's just as far as
Canadian football team.
Yeah, a Canadian football team. It's not even the same as far as prestige and all that stuff. But yeah, I mean. I know the Saudis like to spend money and buy lavish things, but is this something that you think is a real possibility, especially if oil prices go to 70, that they'll have a little extra cash to go buy something small like Manchester United?
Well, remember, we're talking about the Saudi Public Investment Fund. Mm-hmm. And so I would not be surprised to see the PIF buying a sports team that doesn't do very well, because that's exactly the kind of...
Whoa, too soon.
Well, does it make money?
Too soon.
Sorry.
Too soon.
Okay.
Too soon.
All right. Buying a sports team.
The greatest football team in the world. Go ahead now.
Perhaps ever.
Okay. The greatest football team in the world. And by football, we mean soccer.
Greek soccer, yeah.
But yeah. Okay. I would not be surprised that the PIF would make a move like that, mostly because the PIF kind of just does what it wants.
So I'm curious. I got to ask Big Oren, because he's a big Liverpool fan. Of course, Manchester and Liverpool are hated enemies. So I'm curious what he thinks, if this would be a good or bad move for. Of course, the problem with Oren is he never gives you a serious answer on non-oil related issues. So he probably just troll me for like 7 tweets straight. But anyways, okay, one more. I think Saudi article. Saudis weigh large oil cuts in response to coronavirus. There was talk of the emergency OPEC meeting. They got the meeting in March. They're talking about basically shutting in every well this side of the Mississippi. Ellen, will we see a cut, and if so, how much?
Oh, boy, yeah. So this is a big deal. This was a big breaking from the Wall Street Journal, but it didn't seem to do much to increase oil prices. And I think it really shows that the demand side of things is just ruling the game now. And I mean, think about it. Okay, so OPEC just cut 500,000 barrels per day. They announced that back in December. They started in January, so it's been 1 month. So presumably the market, okay, if we assume that all OPEC and OPEC plus countries did what they were supposed to do, then the market should be down 500,000 barrels of oil. Plus, on top of that, we've got Libya. Libya is not included Libya is an OPEC country, but it's excluded from cutting because it's got problems, namely the fact that there's this wacky general out there named Haftar who basically closed all the ports. So we've got 1 million barrels a day off the market from Libya, almost like 800,000. That's a lot of oil off the market. Yep. Right?
And Venezuela's been
don't care.
Yeah, Venezuela's been dead for 2 years now,
yeah.
It feels like.
Yeah. Market don't care because it's all about demand, I think. Plus, we've got more oil coming on from Norway. I mean, the non-OPEC oil sector is just booming. We've got Brazil, we've got the US. How much do you think OPEC would have to cut to get a jump, to get, they'd have to cut, I think they'd have to cut several million barrels of oil per day from the market in order to lift oil prices, even temporarily, just to deal with this market. I don't know. The oil market has caught coronavirus itself. And at a certain point, what's the point? OPEC's market share will be down so much that they won't be able to have any effect on the market. So it's I get that they need to talk it up at least. They're going to have a joint technical meeting. I don't think the market cares if they cut another 500,000 barrels a day. I really don't think the market cares.
Yeah, the market feels like it's trying to trade off of the fundamentals and not the news, but that's what it felt like. Last year we were talking about the trade deal. Once the trade deal is done, how are prices going to respond? Okay, prices didn't do anything when the trade deal happened. We had World War III pronounced on Twitter multiple times when the Iranians bombed the U.S. base and nothing happened. So, and I feel like the market was for a long time trying to trade on the fundamentals. But if they're not careful, they're going to overcorrect that and let the fear of a price surge is going to hold the price down to at some point where the price will have to go up if they're not careful. So I don't know, how it plays out obviously long term, but the market's held the price of oil down probably a little bit more than it should be, I think. But if they're not careful and they keep holding the price down for every so it used to be where every bad news the price went up. Now it's every bad news the price kind of stays down. And obviously these are different signals, but if the price continues to stay down, production slows down, OPEC does take off actual barrels off the market. At some point the correction here could be severe where you see prices really shoot up if they're not careful.
Oh yeah, and I'm sure that OPEC will, if they actually manage to take barrels off the market, I'm sure they will very quickly put them back on. I think people are skeptical they're still skeptical of Russia. They're still skeptical that they'll be able to actually get barrels off the market, or that anyone other than Saudi Arabia and UAE will get barrels off the market. And this also puts a real wrench in Saudi Arabia and Kuwait's plans to restart the neutral zone production. So it's, I get OPEC feels it needs to react and needs to do something, but they really risk kind of writing themselves into a corner, or they risk getting themselves into a corner where they keep cutting and cutting, even in little incremental bits, and it's not doing anything. And at a certain point, the best result might just be to wait it out. The coronavirus is not going to continue for an entire year. The market would suck for a year, but maybe, or 4 months for all you know. Maybe just wait it out, because it's a virus. It's not the Black Plague. It's not going to continue for a year. it will be contained and things will go back to normal and China will continue to function and people will get in their cars and they will drive.
Well, mark this down as the day that the markets might shift. February 25th, we are having on Ted Hall, who came on the Texas Oil and Gas podcast a few months back. He's come back on the Texas Oil and Gas podcast. They had stated back in August, I think I told you about this, Ellen, that the DUCs in the Permian were like 2,000 less or something than the EIA was tracking. So we're having him come back on in February to see where they're anticipating the DUCs are. So I'm curious to see where he thinks the DUCs are, where they've changed. As we know, I like to make fun of the DUCs. But they use actually satellite technology to observe where the DUCs are using imagery and stuff like that. So it's supposed to be a little bit, it could be potentially, if they're doing it right, a better way to track the DUCs. But one of the things that's kept the market sensitive is all of these alleged DUCs, which went up according to the EIA from November to December. So the DUC count is rising. But if we wake up one morning and we find out that the DUC data was off substantially, I wonder what kind of shockwave that would send through the market if you go, oh, wow, we thought we had 3,000 DUCs, we've got 700. Uh-oh, that
would be huge.
Right, and so... So yeah, the market obviously has kept the price down on some level, and it feels like it's wanting to keep the price down. I just hope it doesn't keep the price down for too long. Speaking of keeping the price down, here it is. This article came out on, let's see here, from the Financial Post. Oh, it came out today, right? Or yesterday, the 3rd. What's today?
Today.
I
think it came out today.
From today. Citi cuts oil price forecast by $18 on corona fears.
I know.
So it took us, 33 days, 34 days to get to the new year before Citi said, you know what, screw it, we were wrong.
We were so wrong.
Wrong.
We didn't have someone. We should have had someone on the ground hanging out in the Wuhan wet market.
Oh, Ellen, so they cut it by $18, and that would be Citi's global demand head of commodities research slated his first quarter forecast to forecast between 54 and 69 US dollars in his second quarter from 50 to 68. Moore's sees prices recovering slightly in the third quarter, hitting 53, but still 10 below his original target. In the next 3 months, he said Brent prices could go as low as 47 a barrel. 47, that's low. That's real low. Do you think we'll get down to 47, Ellen?
Well, now that he said it, definitely not.
Definitely not. He's jinxed it. He saved this. He single-handedly saved the oil market.
Yeah, it's like when you're like, I'm bringing an umbrella today, and then it never rains. So yeah,
I don't. It's a steep response, and it's a response that, sure, if the coronavirus spans and morphs and changes, and there's zombies walking on the street, then sure you could see bad prices. Also, 2 weeks from now, we're talking about the coronavirus is being done, and China's trying to make up for lost time, and so they're going to build a bunch of stuff and da-da-da-da. And
well, that's the other thing. You can't count out China spending. I mean, China may just decide to go on a massive spending spree to recompensate, and that could, to overcompensate for the loss. So you have to remember that China is not a passive market actor. It's a much more active one. And so they can also order people to work round the clock. It's not, we're not talking about a European or a North American country here. And so that can definitely impact.
And you don't mean that by geography. You mean by government practices.
Yes. I mean in terms of government practices. They could just decide to spend a huge amount and build a lot of stuff just to make their numbers look better. Exactly. Or they could lie about their numbers.
That's exactly right. And so it's how they handle the post-coronavirus pandemic is yet to be seen. I'm sure they have some historical indicators these groups are going off of, but it seems a little premature to figure out what's going to happen. But here we go. Now we're getting something close to my heart. We have two pieces here. One from the Des Moines Register. Don't count out ethanol. Don't count out ethanol this election season. Well, duh. That's the most obvious thing ever produced by the Des Moines Register. And then we also have one on Joe Biden not supporting a fracking ban. And we talked about this some last week. I think that was in the podcast that we linked up from the New York Times, was that he's one of the few, there might be some that haven't, but one of the major contenders who hadn't said that. And I actually saw a piece where I think it was on this issue. A voter came up to Biden and was wanting him to say it. And he goes, "If you don't want it, don't vote for me." And I was like, "Wow, okay, well, whatever. Good for me." I disagree with you on a lot of things, Biden, but at least that I can appreciate.
Well, one of the interesting things about this Joe Biden thing, so it's actually 2 letters in response to an op-ed, but one of the letters happens to be from our friend Harold the Hammer.
Uh-oh.
He did not sign his letter, Harold the Hammer, unfortunately, but he did write in response to this to say that, so the article was about Democrats' war on fracking will cost them in battleground states. And he's basically saying, look, the U.S. energy sector is creating tens of thousands of jobs, supporting tens of million more. Okay, I don't know if that's correct. I think that they probably overinflate the number of jobs that are and have been or currently are created. But, he's basically saying a lot of these states that are run by Democratic politicians are getting a lot of money from fracking. And that's absolutely true. And he's like in North Dakota, Colorado, Oklahoma, Michigan, Pennsylvania, Ohio, and Texas. I mean, Pennsylvania is run by Democrats right now, and they get a lot of money because they have a drilling tax, and that money goes into a pot that gets distributed to communities all over the state, even communities where they don't do an ounce of fracking, like Philadelphia. So politicians, I think, local politicians like having control of this money. Who's going to not want to have money to like dole out for your, friends or whatever it is they're doling it out for? The question is that are voters going to think the same way? Because you've got Democrat politicians and local politicians in these states are not necessarily anti-fracking because they like the money that's coming in, but I'm not convinced that voters, particularly Democrat voters who say that the environment matters to them, will feel the same way. So they may vote for presidential candidates in contravention of the Democrat politicians in their state's interests, or at least so. Basically, I'm not sure that voters are going to realize that the benefits of this, or voters see the benefits as important. But who knows? We'll find out.
Yeah, it's tough to tell. I think the voters, when you think about voters, like for instance, so I'm obviously very much a free market libertarian, so I kind of analyze all policies through those lenses. But if you were talking about something about some kind of pharmaceutical issue or something, unless it was very apparent, how that would work into how I think the government should run, there'd be questions where maybe I'm not concerned about it, or maybe I'll think through it. But if you talk about oil and gas, well, obviously, I own a company that works in the oil and gas industry, so I pay pretty close attention to that. But here in Texas, it's a little different because most people are pro oil and gas. But the ones who, even they are pro oil and gas, they don't necessarily understand how a policy could or could not impact the industry. And so I think Pennsylvania has probably got I don't know if a diverse economy is the right way to put it, but I wonder if the non-oil and gas folks, if you or your buddy don't work for an oil and gas company, how much you think about those issues and how much they would impact your state or your livelihood or whatever, since it's not as near to you. But and that's kind of the hard thing to measure is how does that, for the voters it doesn't impact, how do they think about it? And speaking of voters, though, Ellen, tonight is the night the Iowa caucuses return. And you know what, Iowa, first off, let me just go on a sidebar here. You got the dang corn people up there lobbying for everything, and then you got this caucus system. Like, why can't you just have voters like everyone else? Like, why can't you just have... They got the caucus deal. I don't even know how it works.
If we had caucusing, I would consider registering for a political party just to be able to participate in one of these caucuses. Because first of all, I think that CNN and these stations that cover politics all the time are really they should stage a mock caucus so that the rest of the country that doesn't have caucuses can actually see what they're like. Because I'm legitimately curious, because I was talking to someone who has family in Iowa, and apparently it's a thing. The Republicans don't do it like this. Republicans do a secret ballot, but the Democrats, it's all open. And so they all get in this room, and they're okay, so, and people will outright say who I'm caucusing with, be I'm caucusing for so-and-so. And so I caucus for so-and-so. And they very nicely ask each other to consider the other candidate, which is so Midwest. But I'd love to see obviously I know you can't have cameras in there because that would be bad, but I'd love to see some sort of like dramatization of it playing out as if, I think that would be for kind of like political junkies, those of us who like follow everything, like that would be great entertainment.
Yes, it would be more helpful to see what actually happens or something on a basis. But
look, I'd like to see some corn farmer be like ethanol is like important to me, so don't support so and so, or like I'd like to see these arguments playing out, or at least an actor's representation of them, or something like that.
So here is my anything we got the corn people coming up. Any tidbit on the corn people? If not, I will give you my Democratic primary commentary.
Well, I have very strong feelings about ethanol, but it's just
really
it's just interesting.
You have never said that on the show.
I've never talked about ethanol, have I? Yeah, I mean, we really put ourselves into a corner with ethanol. Like, I feel you, corn farmers, I do, but like, ethanol is not the be all and end all of everything. I don't know. It's funny because like, I heard someone recounted something they'd heard on NPR, which was a corn farmer who had voted for Trump, but now is apparently said that he changed his mind. Although I really don't think that you can people lie about this stuff all the time. But because Trump doesn't support increasing the renewable fuel standard, but he doesn't want to have a handout from the government, so he had to go get a second job. And like the irony in this is like it's like so interesting to unpack. Like the renewable fuel standard, the money that the ethanol people get is like a government handout,
right?
To begin with,
yeah, exactly. And don't get me talk about on the subsidies on agricultural products. But let me ask you this: do you know the name Tom Harkin? Tom Harkin, Harkin, Harkin.
I don't.
Tom Harkin is the last Democrat to win the Iowa caucuses and not be the Democratic nominee for president. Do you know what year that was, by any chance?
Really? He's the last one.
That's
I don't
1992. So Bill Clinton finished third.
That's Democrat.
That's Democrat.
Okay, so I was going to say because like Santorum won.
Right. Yeah. The Republicans is a little bit different. So the Republicans goes Ted Cruz, Santorum, and Huckabee. So the last three have not done it for the Republicans. But so Bill Clinton finished third in 1992 in Iowa, and then obviously he won it in 96. Then Al Gore, John Kerry, Obama, and then Clinton. So with that being said, I am going to predict Phil the Burn Sanders wins tonight and yet loses the Democratic nomination. That is my bold prediction.
Wow.
Look at that. Write it down.
We're putting that in writing. Ryan's Iowa prediction.
Byrne wins tonight and then loses the whole thing. Now, Bernie, don't go out there and lose tonight. At least string this thing out for a few weeks for me. Give me some fun to play with. But he'll go out there and get slaughtered tonight, and then win the primary. Be the opposite of what I said. So that is my Democratic.
You don't think he's going to win the primary, though?
I don't think he's going to be the nominee. No, but I think he.
You don't
will.
think he'll win the nomination?
Yeah,
you don't think, but doesn't win the nomination.
Yeah. So he will be. He will go back. He will be the next Tom Harkin. So 30 years from now, they'll say Bernie Sanders was the last guy to win Iowa and not win the nomination. So that's my prediction.
Do we get to hear your Democratic nominee prediction today, or are we going to hold off on that?
Well, I had Kamala a long time ago.
Me too.
I thought Kamala was going to win it for the Democrats
all the way,
and she got destroyed. So I also thought.
Well,
go ahead.
Can I tell you what I think happened to her? I think her staff got poached by Bloomberg.
Also,
and that's one of the reasons she quit.
Also, it came out she's just a terrible person, which I knew, but she's also a terrible human being who's
matters.
Yeah, well, I mean,
that matters.
Well, that's true. They're all terrible, but people actually called her out for being terrible and locking people up and stuff like that. So, but that's one thing I didn't realize about her. I didn't realize that she was so hard on the drug offenders in California, and then got busted for putting them in jail and then laughing about it and smoking weed. So, I didn't
laughing about it. Yeah. That probably was not a good move.
Not a good move. So that's my prediction. If Byrne loses, don't at me because hey, it happens. But no. That's my prediction. I will stick with it until Wednesday or tomorrow when turns out
all right.
someone else. Do you have a prediction?
All right.
Or are you going to say apolitical?
Oh gosh.
You can say apolitical. No pressure. I didn't. I just
I just have a really. I can have a prediction. I think that I think, God, I don't know. I really want to say Buttigieg is going to like pull out. I think he's going to have. I don't know if he's going to win, but I think he's going to have a much stronger showing in Iowa than people think.
Ooh, that would be interesting.
Let me put it that way. I think Buttigieg is going to have a stronger showing than has been predicted.
Wow.
But let's just for the record say that I also had Kamala going all the way, and that obviously didn't happen. So like I don't have a great track record.
Yeah,
here.
So don't bet on us, is what we're saying.
Yeah.
If I understand correctly,
don't bet on politics.
Period.
Anybody.
Yeah, exactly. I think it goes Iowa, New Hampshire, and then Nevada. I think is the three. So I think Burns going to win the first two. I'm not sure about Nevada. I don't know if he can pull out Nevada or not. But regardless, he's going to win the first two and then get bounced.
I think
later
the big question is Biden going to win South Carolina?
Yeah,
that would be if Biden doesn't win South Carolina, I think he's done.
Yeah, and that could be the thing. Biden, guys, feels like no one's talking about him right now, but maybe he'll be a sleeper. Oddly enough, Biden's a sleeper who wins Iowa. So okay, well there it is. We'll be back next week. I'll be down at NAPE. So if you're down, one of the listeners is down the NAPE area, Houston area for NAPE, let me know. I'll be happy to meet up with you if possible. Ellen, where will you be this week? Investing.com, Bloomberg, Forbes.
Yeah, I'm going to be on
Post.
Forbes. I'm going to be on. I may be on the Washington Post. We'll see. That thing should probably come out soon. But I will be on Forbes talking about coronavirus. I will be probably on Marketplace, NPR Marketplace, later on Monday. By the time viewers get this, I guess listeners get this, that will be over. But yeah, and also on investing.com, we will probably be looking at what's happened with coronavirus and demand so far, and talking about what is likely to see for next week.
And you will be on Twitter breaking down every vote
Always.
counted at the caucuses tonight.
Oh yeah, I think I'll actually be watching the Celtics game.
Game. Hey, yeah, well, that's a lot more entertaining. So, Ellen, it was good to be back. We'll be back. I guess we're back. Yeah, we're on normal schedule. So, listeners, thank you for tuning in, and we'll be back next week.
Bye, guys.